Thank you very
much, Mr. Chair. As my colleague Mr. Jones alluded to, this is about amending the Reserve Bank Act. It's about giving the Reserve Bank greater powers to look after, well, basically prudential supervision over the insurance industry. And I suppose you can have no discussion about the Reserve Bank without mentioning monetary policy at all. As Mr. Jones alluded to, monetary policy, I suspect, is going to be one of those election issues where National wants to keep the status quo, therefore inhibiting the potential of our exporters to really grow and achieve their potential in this day and age of globalisation, versus Labor, who has a bold new plan. That's PLAN. I know those chaps over the other side don't know how to spell that, let alone what it means. But Labor has a bold new plan to really deal with one of the three major problems New Zealand economy has at the moment, and that is a volatile exchange rate. A volatile exchange rate at this point in our time means that exporters have no ability to plan with any type of certainty around how much they're going to produce, where they're going to sell to, how they're going to do it, and the only way to really do this is to work with the Reserve Bank and the Reserve Bank Act. Mr. Chair, the introduction of this piece of legislation, and we're talking about the Insurance Prudential Supervision Bill 2009, it's another significant step towards achieving clear, robust regulatory arrangements across the financial sector. And again, when we talk about what's happened in the financial sector, it has been an absolute disaster as many thousands of Kiwis have lost literally millions and millions and millions of dollars. I'm talking about the financial sector here.
Should be talking about the bill.
I am, sir. This is very much to do with the financial sector. We're talking about the financial sector. I will get to this, this member over here. If she had something worthy to say, then we may listen. But in fact, if she kept quiet and used her turn, then we wouldn't say. What this bill does, Mr. Chair, if people will listen, they may actually learn something. It will replace outdated and disjointed legislation. It fills gaps where no prudential regulation currently exists. Now, if that isn't part of the financial system, then I'm not too sure what is. But having said that, this side of the House has no idea at all, because they don't want to do anything. They want to retain the status quo when it comes to the financial systems of this country. And we know the status quo has not worked. But you always go back to the status quo when you don't have a plan on how to move things forward. But anyway, this will remove inconsistent application between different insurance sectors. The purpose of this bill is to encourage the maintenance of a sound and efficient insurance sector that promotes confidence among policyholders and the general public. And of course, confidence among the general public in the financial industry has been at an all-time low due to a dreadful state of governance and maintenance and management to date, sir. Thank you very much. The bill establishes a licensing regime for insurers and prudential regulations with compliance largely self-administered, while supervision is provided by the Reserve Bank. As mentioned, this is another tool in the Reserve Bank's arsenal of tools. We think the Reserve Bank could do a hell of a lot more in driving the economic growth of this country. They haven't got the regulatory or the statutory power to do that. The Labor government, which we will have here in about the next, 12 or so months, will change things, sir. We have a plan. The bill will cover most entities that undertake insurance business in New Zealand, including life insurance, health insurers, captive insurers, and the insurance activities of incorporated societies. Mr. Chair, this is a sensible bill, and it is one we support. It establishes, as I mentioned, a prudential regulatory framework for the insurance industry, and in doing so gives a number of powers to the Reserve Bank to carry out its new role. Now, let me just mention some of the key provisions of this bill. It will require insurers to, for example, obtain a licence, and it has to meet a criteria of eligibility to do this. Maintain solvency. Well, that makes sense, doesn't it? Of course we want our financial institutions to maintain solvency, because if you don't, you end up happening what happened with the finance companies. They were insolvent. Kiwis lost millions and millions of dollars. In fact, I hope the new Minister of Consumer Affairs will take a call on this, because this does affect insurers. It does affect consumers, because consumers are at the heart of this. He is passionate about this. He is indeed, so I hope he comes down. it will mean that you have to obtain and publish financial strength ratings. So in fact, Mr Chair,
Stuart Nash.
thank you very much.
Good choice.
Thank you, good choice, good choice. So what it will mean is they will have to obtain and publish financial strength ratings. What this does is it allows consumers to have choice, but not the sort of choice they had in with the financial companies. What this does is it means it's transparent, it's out there, they can have a look at it and they can understand what they're getting into. These companies will have to meet fit and proper standards for directors and relevant officers. Again, most important, if we look at the financial sector in the past 3 or 4 years, you could very strongly make a case that one of the reasons why they acted so dismally, in fact they failed, is there was not a sound governance structure at all. In fact, it was deficient, it was missing. They have to comply with a risk management program. Again, something that was missing in the finance companies. They've got to appoint an actuary. They've got to prepare annual financial condition report and an annual 6-monthly financial statements.
Is this all in the new bill?
This is all in the new bill. It's a fantastic bill because what it does is it provides certainty for the consumer. And they have to maintain at least one statutory fund that relates to their life insurance business and is solely for the purpose of meeting the life insurance liabilities. Mr Chair, this bill recognises and accommodates supervision of overseas insurers based in New Zealand by the home regulator, subject of course to such regulation meeting the satisfaction of the Reserve Bank. The bill also allows for cooperation with overseas regulators. In essence, what this means, if an insurance company with a parent overseas meets a whole lot of conditions deemed necessary by their governance authority in, say, for example, Australia, they don't have to go through the whole rigmarole in New Zealand if they can prove that they're good and sound and robust, as a lot of those key provisions I mentioned allude to. The bill obliges the Reserve Bank to supervise insurer compliance with the bill and regulations. And in event of non-compliance, the bill enables the Reserve Bank to escalate supervision through investigations and ultimately distress management and liquidation. Some regulations will be new to insurers, and a transition period of 2 to 3 years will follow enactment to facilitate a path to compliance for insurers that are unable to meet the licensing requirements at the time of enactment. The insurance market is very large and diverse in this country, and so this transition period is important to make sure that we give every company the opportunity to comply. But more specifically, the bill sets out a framework of prudential regulation and supervision for the New Zealand insurance sector. The approach is generally aligned to internationally accepted insurance regulatory practice and will recognise the diversity of the New Zealand insurance market. Now, what I would like to do, Mr Chair, is just go through some of the main areas of this bill, and these are as follows. Now, I must, the member over there, this is astounding, isn't it? This is a member over here who many of his constituents have lost hundreds of thousands of dollars due to a very, very lax set of regulations governing the financial sector. And he doesn't care. He doesn't care one bit at all. I challenge that member to call a public meeting and invite every single person in his area, because I know he doesn't hold an electorate and there's no hope of holding one of the HUD electorates, but invite every single person that has lost money to one of the finance companies and explain to them why this sort of financial regulation is not important, why it's not needed.
This is about insurance, not finance companies. Continue.
Mr Chair, what I want to do is go through covering some of the main areas that this bill. Now, the licensing of insurers. Licensing ensures a consistent set of minimum standards is met by all insurers. The standards must be obtained to receive a licence, and once a licence is granted, an insurer is able to be monitored against those standards. So there is a minimum set of standards that every insurer must meet. Most important, but common sense, as legislation should be. This reduces the need for consumers to make complex inquiries regarding an insurer's financial strength and other indicators. And if one of the criticisms I have is there is such a DIY mentality to investment in this country that we need to make it incredibly clear. The level of financial literacy is low, so what we need to do is make it very clear, very simple, so consumers know what they are getting into. This bill does that. Insurers covered by this new regime will need to be licensed before the bill comes into force, and the bill will come into effect 18 months after it has received royal assent. and after this date, it'll be an offence to carry on or hold out that you can carry on. Insurance